Hello subscribers, and welcome to Rozara's Investments. My name is Ara, and this is Rozara, who inspired the channel. So today I want to talk about a decision I made when I was younger, and that decision is I am going to be a millionaire someday. So currently I'm nowhere near a millionaire. I am maybe a quarter of the way there, and I'm very hard on myself about that. I've made some huge mistakes in the past to lose money, and maybe equally huge, I have passed on some investments that could have made me a millionaire, like Apple, for example. So there's a number of different things that I did wrong, but today, because the market is so down, and today I'm down like $17,000, I'm trying to stay positive and focus on some of the things that I've done right in the last few weeks or last few years even. So one thing that rich people do is they own assets. They own stuff that is going to become more valuable over time. They can own restaurants, they can own hotels, they can own stocks, they can own real estate, single family homes, multifamily homes, rental producing property. They can own things that provide them passive income like municipal bonds. They can own assets like gold, silver, paintings. They can own all kinds of different assets. And the one theme that is common between all these assets is that they are going to make them money in the future. They're assets that are going to be worth a lot more in the future. So you buy rental property, you collect rents, and eventually you sell that property for more money than you bought it for. And it seems like the people that are not focused on becoming a millionaire end up buying things that do not produce income and do not appreciate in value. Appreciate means to go up in value. So they'll spend money on like stuff like cars, stuff like clothing, stuff like going to restaurants, stuff like they might spend money on something like a single family house, which is kind of a question mark when it comes to whether or not that creates value. Because on one hand, you are buying a house that will go up in value, but on the other hand, you're getting a mortgage, and there are other reasons why you are spending money and destroying value, like, you know, when you have to do stuff like buy lawnmowers, buy windows, buy stuff like that. So a house that you're actually going to live in yourself, I would kind of put in the middle. I would say it's much better if you were going to create value to buy a 3-family house, live in one of the apartments, and collect rent from the other 2, something like that, or even a duplex. So anyway, what I'm doing with my life is I am buying assets that are appreciating in value. And for this girl too, her next asset is going to be McDonald's. I haven't got around to doing it yet, but she's going to buy 10 shares of McDonald's. And that's because we go there, we get the Happy Meals. So basically, I think that is a very good difference, a very big difference between people that want to become wealthier and people that aren't actively trying to become wealthier. So since today is the day of positives, I am focusing on the fact that I have built some wealth for myself, and I am definitely on the road to becoming a millionaire. And days like today, when the market is down and Chinese stocks are down, it kind of sucks. But to look at the bigger picture, I still own shares in all the company that I own shares in, and I haven't sold anything. In fact, over the last week, I have been buying more stuff. Today, I bought shares in BJ's Wholesale Club, which is a company similar to Costco, and it's a company that I've shopped at a lot. My mom and stepfather have shopped there frequently over the last 30 years of my life. And I also bought shares of APPS, APPS, which is the symbol for Digital Turbine. And, oh, by the way, I forgot to mention, BJ's just had their IPO today, which is one of the main reasons why I bought it. I've pretty much done well buying stocks on their first day of trading, like Stitch Fix would be another one, SFIX. I don't think I've ever talked about that company, but that's up 50%. So overall, I've done pretty well buying stocks at their IPO. So the second company I bought was APPS, APPS. That's for Digital Turbine, that is a company that helps app makers with solutions to getting the advertising revenue. So that is a company that currently loses money, but I hope that they are on track to make money because their revenue is growing like crazy. If you look at a graph of their revenue, it's going up, up, up over the years. And even over the last 4 quarters, their revenue is going up, up, up. So I bought that at $1.53 a share, and I bought 1,000 shares just to dabble in it. And I plan on holding this one for a while. I might sell half my position if it goes up significantly, but I'm definitely holding on to half my position long term. And same thing with BJ's. If BJ's pops to like $30 or $40 a share, I might sell half my position. But other than that, buying it today with plans to hold for the long term. So this is 2 more companies that I'm adding to my portfolio, and I am building wealth. That's the theme of the video today. So I hope to get there in the next 10 years. I've historically been on track, and I've made some big mistakes in the past, and I'm trying to always learn from my mistakes. So to wrap up the video, I want to talk about 2 things that I think that I have learned from my previous mistakes. And number 1 is a couple weeks ago when the market was very, very high, I sold $15,000 of one of my positions, $14,800, and just to raise cash. And I also sold $12,000 of a mutual fund that I owned. That's because when the market is high, everyone's happy, and then usually shit happens, and you're like, oh man, why didn't I sell some stuff? So I did sell some stuff. I raised about $25,000, so I was happy about that. And then just recently, in the last couple days, I have been buying shares of some more Chinese companies and the 2 companies that I talked about today. So I have spent about half that money that I raised now that the market is down compared to where it was. So I am trying to ignore all the bad news, buy stuff when it's down, and also similarly ignoring all the good news and selling a little bit of stuff when the market is up. So my swings in my account aren't as big as they used to be. If you've been following back in January, my account took a $50,000 drop, and then it was up about $48,000 a couple weeks later. So now my big drop is in the $17,000 range, and I'm definitely setting myself up to rebound more than $17,000 when things start to go good again. I'm buying shares of high quality companies, I'm buying call spreads, all that good stuff. I'm buying assets that are going to appreciate in value, build wealth for me, and make me become a millionaire, hopefully within 10 years. Thanks for watching. Thanks for investing. I'm not telling you what to do, but I do hope that you buy some stuff. I'm buying some stuff for this cute little girl right here, and she's definitely going to become a millionaire as well. So thanks for subscribing. Thanks for sharing. Thanks for everything. Today's a wonderful day, regardless of how much money you have, because life is great and there's people like this in the world. Bye, guys.